We are on the show. Hello. Do we have all the guests with us? So we can start. We have Jose, we have Carlo. We're waiting for one more. Well, we'll start because I know we have our audience waiting. So if there are yes, there we go. Hello, Simon. How are you?
Hello, good afternoon. Thank you, Liz. Doing well.
Excellent. Right. So I'll start in with my introduction. Welcome everyone. Hello and welcome to the API Chronicles Unlocking the Future, a live celebration of APIs hosted by Marquetta. Today we are exploring how APIs are empowering innovators to deliver digital innovation. And as with any digital innovation strategy, there isn't one route to success, and banks are exploring many different routes, whether they are building, whether they are buying, whether they are partnering as they look to innovate and deliver what is the ultimate goal, which is a better customer experience. So I'm Liz Lumley. I'm deputy editor of The Banker magazine, and we have a wonderful panel here for you this afternoon with people representing from ING, Illumity, and you. So, welcome, panel. Thank you very much. So, before we go on to our questions, and Lam, must I say also before I bring on the panel to introduce themselves, as I mentioned before, this is API Live. So, we will be taking questions from the audience. Please put your questions in the chat, and hopefully we can get some of them in during our session. I'll just say the more interesting and provocative and imaginative the possible, you will more likely get picked up by us. So why don't we start with our panel so they can introduce themselves. So why don't we start with Simon? Please introduce yourself.
Yes, hello everybody. My name is Simon Boonen, and I work as a fintech consultant in ING. I'm part of ING Neo, which is the innovation department of ING. And in my role, we're really trying to build bridges between ING on the one side and the ecosystem of fintechs on the other to see how we can collaborate and reinforce one another.
Wonderful. Jose, can you introduce yourself, please?
Yes, hello. So my name is Jose Rosa, and I'm currently the head of product for You, which is a joint venture, a young joint venture from Post Finance and Swissquote in Switzerland. So, yeah.
Perfect. Thank you so much. And Carlo, can you introduce
Yes.
yourself?
Hi, everybody. I'm Carlo Panella from Illimity Bank, and I am head of digital banking in Illimity Bank. We are a bank born 3 years ago, so quite young. And I am also in charge of board of directors in Hype, that is a fintech leading in the retail market in Italy.
Wonderful. I want to congratulate all three of you for giving very, very concise intros to our audience. So it's really helpful to introduce yourself. So as I mentioned before, what we're going to be talking about today is to greenfield or not to greenfield, whether to build a new digital bank from a greenfield site or look at other routes and paths towards digital innovation. So I'm really going to start off with a question for all of our panelists to kind of weigh in about, what path on that innovation journey they took. Did they launch a greenfield bank? Did they modernize an existing architecture? Did they partner using open APIs and the open banking frameworks? Or did they pursue a joint venture with another bank or a new fintech company? So I really would love to know what did you choose and what lessons did you learn? So I'm going to start with Simon on this. What path to innovation did you choose and what lessons did you learn?
Yeah, thank you, Liz. And I think it's a quite broad question to try and answer all at once, but let me try and take a shot, right? So ING is a big international bank, and in effect, we're exploring a number of paths in parallel, I would say. I think back in the days, as we talk about launching a greenfield bank, ING Direct 20, 25 years ago may have been one of those greenfield banks that kind of became an international success at least across Europe and possibly also in the Americas. So that's where we got a lot of international exposure. But trying to fast forward also to a bit more the here and the now. If you have to decide on what to do, I think it starts really with understanding the role and the position one has in the ecosystem, in the financial ecosystem. And only from there you can consider how you can frame or position the existing resources and capabilities you've got, and also to understand the kind of relationship they hold with the position in the ecosystem you've got. Then thinking about, can you reinforce that kind of position with partnerships? And the first ambition there should be then to try and learn from your position, from the ecosystem, from the dynamics. And then only with sufficient learnings, I think it makes sense to try and take next steps in this kind of way forward, right? So then you can think about, do you want to really greenfield? Do you want to modernize your current tech stack? Do you want to partner, or do you want to try and do all of that? And effectively, what I see at ING, but maybe we come back to that later in the panel as well. We're taking quite a broad approach, so we're experimenting and running down several paths in parallel.
I wanted to stay with you for a follow-up question before I move on to Carlo and Jose, only because I agree with you. ING Direct is, one of the, I don't want to say, the older, they've been down this innovation journey longer than maybe some other banks. It's been a name for this for quite some time. I mean, if you were launching this today, what are does the bank look at what are some of the lessons learned if this was done today, as opposed to when ING kind of started this journey a number of years ago?
I think there is definitely some change in the environment, right? So ING Direct at the time was, I think, one of the first, if not the first, internet bank that was launched as an internet-only bank. And back in the days, I think technology allowed for launching an internet bank, and we may have been early with that, and that did give us a lot of traction back in the days. I think if you're trying to fast forward that to what we're doing now and what we're seeing from a technological point of view, many things have changed, right? So everybody is having a cell phone, a smartphone at their disposal. Conversations have already shifted from the offline world into the online world, into apps and different ways of engaging. And the world has become a even more global playing field, I would say. So if you were to reconsider setting up something now compared to 25 years ago, I think, yeah, those changes in tech, those changes in experiences, and those changes also, I guess, in the expectations of people have so much changed that will require a need for really thinking through what you would be doing different. And I think indeed it would come down to global scalability, but still trying to find ways indeed to really put the customer even more at the heart of the operation. And then also thinking truly about, is there a need, and how can you eventually also make sure indeed that there will still be local touch points. So global foundations, local touch points, customer at the heart.
No, interesting. So I'm going to move on to Jose now, right at the moment. I mean, I really wanted to look at, what choice did you guys make in your innovation journey?
Yeah, as Simon said, it's a big question also. So on our side, what really happened is that Swissquote was already is a very strong foundational for tech. So it was already there. So it has it has more than 300 developers in house. So it's really considered a tech company more than a banking company. So this is one of these foundational parts of Swissquote, which has made also you very successful in reimagining the architecture, because Swissquote was very focused on the trading part, and for to launch a neobank like we have today, the idea was to be, so what do we have, what lessons did we learn from the past, what is our technical debt today, and how can we rebuild this from scratch, and just getting our tech just getting our tech people to get a different value proposition, and how can we do it. So for us, it was really on that side for the technical aspect. We were able to deliver fast because we had the experience of building already, I know, 3/4 of the of what was the proposition of the app. And then building on stuff and getting new partners also was very important, because some of the things we didn't know how to do it. So you need to pick very well the people which you are doing with. So getting out that route of we will improve, but in fact we'll do it from scratch, because what we have today, it does not fit what we want for the future. It was a hard decision, but it was clear that we needed to go into that direction, or else you get the weight of the joint venture into the new bank. And if you want to develop new things, of course it will not work, because you will not be able to be so fast releasing new features or iterating in the current features, because your technical data is it's very big. So
Mhm.
for us, it was really analyzing that and deciding what can we do and how fast can we do it, because the answer needed to be also very fast into the growing market that we see today. Yeah.
Yeah, no, interesting, and I'm sure we're going to go into some more of those details further on in our discussion. People will be interested to know, but I wanted to move on to Carlo. I'm interested to know what choice you guys made on the innovation path.
Well, if I have to choose between greenfield or partner with somebody, I would say both, because we
Mm.
started. We were starting in 2018, starting from an idea. Our founder, well, I'm in the small group of people that was creating Illimity since the beginning, and we started from a PowerPoint. And so we started really from a greenfield, and we had the fantastic opportunity to build the bank exactly how we were dreaming to have a bank made like. So API was one of the first thoughts. So having an open banking architecture, and when I say open banking, I would say open under different points of view. First, offering. So we produce some products, but we also distribute other products, banking products from other banks. We don't want to be the best in everything. We know we are a specialized bank in credit for SMEs, and that is what we can do well, and that is what we, let me say, we produce as a product. Then open by design in terms of PSD2, so open to other banks, open to data, gathering data also from others. And third, open by technical architecture. So having an IT department, IT architecture that is an enabler of this network approach. This is how we managed to start from empty and reaching 2.5 billion of assets in a couple of years. So for us, the decision was obvious, because I mean, we are starting from nothing, and the idea was not to buy something or some bank, but to build it from scratch. But at the same time, or I would say better to say, during this path, we decided to enter also the retail market, as we are specialized on corporates. We entered the market the first stage just to have some funding for lending for corporates, but then we appreciated the potential of having the challenger banks were exploiting in the market, and we decided to enter in that market. And then in that case, we were deciding whether to do it on our own, as we had the platform, the technology, also people able to do that. But then during these evaluations, we met Sella Group, that is a banking group in Italy. They are quite advanced in terms of innovation, and they created Hype, that is a fintech. It is an email, technically speaking, that now has 1.5 million customers. And we decided to bring into Hype our knowledge, our technology, and accelerating that company. So we made the JV, 50-50% JV. It's a unique case, at least in Italy, where two banks, two different banking groups, joined their forces together to accelerate the growth of this company. So we sent there some people, 25 people, that at the time was 25% of workforce in Hype, so quite a lot of people. Technology, all the account aggregation, PSD2 technology. We gave them our IT people, some of our IT people, so they now have an API-based architecture, so based on data, based on a data lake, based on openness of offering. And so we decided to go for both these roads.
Mm-hmm. No, it's interesting. I mean, this is lovely. This is kind of, I don't want to say vastly different paths, but this like sort of different flavors of getting to the same point that each of you kind of outlined based on the context of your organization. So I think it'd be great to sort of, delve into that more with our conversation. But I wanted to go back to Jose a little bit. We greenfield banks have been launched, for maybe the past over the past decade. A number of them have kind of failed in the past. And while we've had successes that have, done things a bit differently. Why do you think some have failed so spectacularly and some successes have happened? What is their what are they doing right and wrong?
Yeah, I'm not here to judge anyone, but it's the fact that a lot of the green fields that or the initiatives that have been trying to people have been trying to push forward, they have failed. And I think I would like to start like with the success ones, because these are the ones we're seeing right now. There's so many opportunities in the market. We see a lot of people say, "Oh, there's so many neobanks right now." Now people are giving birth of of neobanks, but in fact, there's still a lot of space here, because in fact, for a bank to be a greenfield bank or a new bank to be successful, you need to have a good foundational basis. So you need to start from there. And also, what I think is that the successful ones that we've seen until now are the ones which are delivering value, and more of in terms of outcome for their clients and what they're looking for. And the third thing, I think they're solving real problems, and they're not just pushing old solutions to clients who don't want to have them, because they know what it costs to be with an old bank, and this costs a lot in terms of fees. So in here we're talking about pricing and also convenience. So we're talking about people which are in constant mobility, and this is how the generation that we are today, it's already like this, but the generation to come, it's also based on that. And also they're focusing on ideas and trying to grow and to develop, and they're looking not only for the bank out for the banking aspect of it, but also for the social and the lifestyle. So how can a bank can observe this and can move forward onto this path? So another aspect from the successful, it's the digital payments. We have been facilitating now the digital payments, because in the past it was really hard. And when you have two banks, you don't have only one bank today. You have different financial apps for different things, and you maybe have one main bank where your salary is, but that is maybe the most painful one because it's still an old one and you trust it. But but it's there. And I think
Yeah.
if I get that into the why the other ones were not that successful, it was because of exactly the opposite. Because people, in fact, they were not focusing on what clients were saying, not listening to what they were saying, and also maybe a lack of income generation, because in fact they were focusing maybe on one or two products, maybe on cheap payment products, and focusing too much on deposits, which were costing a lot to the clients. And when you do a neobank, the pricing, of course, it's coming down, and it's better for the client. And also, yeah, a weak proposition in terms of delight for the customer. So
Yes,
that,
yeah. A lot of people talk about delight, but I very much agree with you. I think there's, payments is the gateway drug to true fintech innovation, which sometimes not everyone realizes. So it's an interesting discussion.
just on that to
Yeah.
say that today one of the things that still converts a lot and when you do digital advertising, it's a card. When you advertise for a card, people, it's like the way entry. This is why Revolut, for instance, which everybody knows, they entered the market with a card, and it was a
Mm.
super high value proposition for the people, because we're getting away from this we're still in the digital era, but you need physical things also
Yeah.
to be successful.
You
And
want you want what people recognize.
yeah, exactly. So
Wonderful. So I'm going to move on to Simon next, because we're going to go on to a discussion about, I know we're talking about greenfield sites or not greenfield sites, but also this is kind of roots to innovation. And I'm someone who I really kind of rebel against this, what I call the magic bean theory of innovation, that if we just get that magic bean, if we just get that rule book to follow, we'll get everything that we want to build the product to delight customers. But I wanted to talk with Simon a little bit about what are the myriad of routes to innovation? I mean, like what is the context you need to look at about whether or not you should do a greenfield site or partner or do APIs? What are some of the things that organizations need to consider?
Yeah, and also that again, Liz, is a complicated question, perhaps to answer in full. But let me give it a shot also here, right?
Mm-hmm.
So there is a broad variety of options that you need to take into account, and that comes with the ecosystem, but that also comes with the organization that you're part of, and what fits with the organization. And then there's a number of things you can think about. And what we at ING at least see as something that's super important to us is to have this kind of strategic positioning of innovation for one, but then also trying to take a strategic approach to building, buying, or venturing or partnering eventually. And there might be relevant cases for all of that. So the building we typically do, we've got our own ING labs in which we try and build initiatives out from 0 to 1. Oftentimes it starts with an idea sparkled by our own employees, and we check whether something is available in the market, right? So if there's already something super comparable or usable available in the market, then there is no need to build, because then you can already pivot towards partnering. If that is not the case, and if it's something that's got potential, then we will try and build it ourselves in the labs. And we're using a structured way of approaching that. It's really indeed understanding the real customer problem at hand, trying to map a solution to that, and then also trying to see if there is like market traction, market potential for such an idea, and the solution it needs to bring it really to the market. We do that stage by stage, really. We don't hold back in also early stage trying to kill ideas that don't prove or show this kind of attraction, to really only make sure that the best ideas make it to the finish and have potential also of really becoming a fintech by themselves, if you will. Then next to that, as I already was saying, there is the partnering option, which can be super convenient in many occasions. We're doing this at scale, I would say, across the organization, and we're really trying to play with also the idea of, if we don't need to build everything ourselves, and it's not just ideas coming from scratch, but it might also be indeed trying to solve current business challenges or problems. There might be many companies outside of ING already having decent solutions in place or decent capabilities in place that can help us forward. So rather than trying to reinvent a wheel, we will look outside and we will try and find appealing partners to collaborate with, to see how that can improve or solve our pain points on the inside. And there was also how can we help our customers move ahead? Because, well, if we can solve those pain points, ideally that will also benefit our customers. And beyond that, the other option could also be if there is super interesting propositions in the market that may benefit our customers, because it's a great product, it's a great service, it's a great proposition. Eventually, instead of building that ourselves, let's see if we can distribute that to our customers in a way indeed that they get the access to it. They still have the trust and have the app from ING, but then having the additional kind of proposition embedded in the ING environment, which may serve them well. And then finally and selectively, we're also looking into investing. So we've got a venture capital team, a corporate venture capital fund within ING. And selectively, we're trying to also make investments in companies, not just for the financial sake of it, but also trying to find strategic angles as to how we can reinforce one another, how these fintechs can possibly benefit from collaborating with ING, and for ING also to learn from these fintechs, especially if it's about new technology. We see that many companies are ahead in latest thinking, more experimental, and there's things we can learn from that. And if we can apply that directly, that is great. But in some occasions, it might also take a few more years before we are getting there. So then it's at least good to have this kind of relationship already, to get that kind of exposure and to learn from them. So that is the build by partner approach. And I would say on the back of that, what is super key is also to have a culture that allows for innovation, that allows for experimentation and failing fast, and to make that happen. Because without that kind of a culture, you can put all the mechanics in place, but it's not going to happen.
Mm-hmm. You've kind of given a good highlight for my next few questions. And I think I'm going to hold off. I'm going to come back to you to talk a little bit about partnerships and about culture. But I wanted to come in a little bit with a question about APIs. And I'm going to go to Carlo for this next question. I mean, often the past few years, every conversation about innovation has been about APIs. But I've had a number of conversations with people where they talk about the time in their career where they had to explain what an API was at their bank. So Carlo, maybe you can talk us through, what do APIs really enable in terms of delivering that modern technology and personalized experiences and delivering faster product development? Can you go into that a little bit?
Well, API are of course very important, but they are an enabler because API by themselves are not enough. The first ingredient, and we've talked about this before, probably is culture, because API as a technical protocol, but if you have to design your offering, you have to design your service starting from an open banking, because we are banks, but this is valuable for any industry sector. The recipe that we found particularly effective is not to have only APIs, but to have APIs around the heart that is made by microservices architecture, that are the atoms, the smaller parts that are like the Lego bricks to build things. Then data. Data is fundamental, but not only having data, but also quality of data, speed of updating of data, the number of sources, so how many data you have, and then the capability to work on this data. Then API is a good enabler of a connection, of a partnership, of any kind of interaction with the external world. And when I say external world, it can be versus customers, so the final the end user of your services, but also with other partners that maybe are in the back end compared with what the customer can see. And this is particularly important because it creates a kind of tile approach to things, so that you can choose and cherry pick the best solution that you need to deliver what you want. I give you a couple of examples for retail market, for instance. We partnered with Fitbit, that I think everybody knows is the smartwatch, particularly effective for fitness. We made some products working with them so that you can track your steps with the Fitbit. That is normal functionality. But then if you are a customer, a limited customer, a retail customer, you can put apart money depending on how many steps you perform every day. So we created some products through the APIs, through data, that put together products that can, of course, live alone, but that put together create something completely new. And this is, customer experience, nothing more, but was very effective because customers were amazed of this kind of approach. And we have done this thing also with a couple of other players in Italy. So API is enabled to do that, but also enabled to work with some financial information provider in real time, so that you can give credit at the blink of an eye. So API, but again, API are an interface that enables, but if you don't have the capability to work with what is coming from the APIs, then I wouldn't say that they are worthless, but they have a lot less power than they could have. So this is our experience. And what is important is to use APIs in every direction. I mean, both versus to give to final customer some solutions, but also to work with your partners, because in that way you can provide an holistic experience.
So I want to move on to partnerships. I'm going to actually stay with you, and then go to Simon second. That holy grail question about effective partnerships between banks and fintech companies gets discussed a lot. Has there been in terms of cooperation between these entities, has this evolved over the past few years? I mean, especially the last 2 years have been during the pandemic. How have you seen the partnership question evolve, and has it improved? So, Carlo, I'm going to stick with you to get the first answer on that. Carlo,
Sorry, I didn't hear you.
I'm looking at to see whether or not you felt that partnerships between banks and fintechs have evolved and improved over the past few years.
Sorry, I had a problem. I didn't hear you before. Yeah, we are partnering with some fintechs to provide a better service. What we are seeing, but in general in Italy, what we are seeing is that fintech by themselves have some difficulties to get out of the startup phase, and the best performance are coming when these fintechs work together with banks, because they are a kind of accelerator to performance. They are accelerator to deliver projects that otherwise that are difficult to implement in the banks. We have recently made a research with Ambrosetti, that is a research firm in Italy, to see which are the trends in the market in Italy. And this is what I was saying now is the outcome of this research. And probably there is a kind of symbiosis between fintechs and banks, because as banking is a regulated sector, many times fintechs have very good ideas, but have a lack of knowledge in terms of what the rules ask to who is doing our job. So the mix between the expertise, the soundness of the bank with the freshness, the speed, the positiveness, let me say, of the fintech can make the difference in the market. So this is our experience in terms of partnership.
No, interesting. Yeah. So Simon, I'm going to go to you now. I mean, what are your views, especially the last few years, on sort of that evolution and progress of the bank fintech partnership?
Yeah, and I think the kind of collaboration between the bank and the fintechs it's instrumental in a way, and we may be competing in some occasions, but in the end, I think the partnership approach is really instrumental of making it work. And we've always also said that we really believe in this kind of a collaboration. And I think Carlo was already hinting indeed towards the different kind of animals effectively that banks and fintechs are. So it's also about trying to find the kind of way to complement one another, right? So how can you do that? And we see that fintechs are eager in developing new propositions, putting innovation in place, and trying to 10x or 100x improve something product-wise, service-wise, or both, ideally. But that might be a challenge eventually also from this regulatory perspective. Banks, on the other side, have the regulations in place, and with the clients they've already accumulated and with whom they have the kind of relationship in place, have, I would say, a very attractive distribution network at the least. So if you can bring that kind of innovative spirit from fintechs to the distribution network of the bank, you might create a win-win. And then the thing we're not mentioning here is the customer, because I think in the end, it should also be really about that customer. So the customer should be delighted with the new proposition, with the new product, with improved service that is being provided, ideally in that kind of combination to create a win-win-win for all parties involved. And I think I found a quote from Chris Skinner that you undoubtedly know, who also said, many startups don't even understand banking, and many banks don't understand startups, or more specifically, they don't understand technology and digitalization, right? So if you can find a way to work together, you can create this kind of a win-win, but if you don't, then either party may also lose.
It's like Venus and Mars talking sometimes a little bit with fintechs and banks. So yeah, I mean, so moving, like kind of continuing on with that partnership question, moving on to Jose, I mean, what are some of the criteria that banks should use to evaluate some of their technology partners then?
Yeah. So regarding that question, I think the first thing I would say, it can seem very naive, but I would say, like, be aware of over-promising people and salespeople, because in this world of the technology, there's a lot of people trying to sell you some things that they don't have. And we see that at some point when you want to integrate some solutions, you can almost fail projects and entire projects because you relied on just one partner that was not there to deliver what you would expect. So I would say that would be the first thing, which is super naive, but be aware of this type of things. And then it's for me, I said this once also discussing with Marketa, and it's how are they investing in research and development? How far are they in that? And does this fit also, it's another criteria, with your mindset and your culture? So because you can seem to be in line with someone, but maybe they're just not in that mindset and the same growth appetite as you are at that point. And that can be that they can be very aggressive in the sales, but in fact it's maybe because they're getting out of some situation and trying to deliver what you want. But in fact the tech stack, another point, another criteria, is just not there to be able to deliver a solution or a partnership. And then I would say another criteria also is how fast and adapt they can react to your requests, and also to the market and to the regulation and what is happening. Because what's happening today in fintech and banking is that the regulation is constantly evolving. And when we start a project that can be from 1 2 months or to 3 months, and then projects which are bigger, and you don't have a great partner there was following up, and it's already telling you or warning you of that change, it can also be a criteria that you need to look to. And then I think the last thing, but one of the things I already said, is that the mindset and the culture. Go ahead and see if they are with you, and how they do things, and how they deliver, and what other partnerships they already have that can prove that,
Mm.
and what people are saying about them.
Oh yeah, very much. Yeah, we're going on to the big culture question next. I know what culture definitely eats absolutely everything else for for breakfast when you get into it. I mean, so I'm gonna this question I'm gonna ask for all of you, and I'll start with Simon. You know, culture is still kind of this huge barrier to a lot of digital transformation projects. You know, how do you really, how does a bank or an organization or a firm kind of approach that culture question when sometimes digital is one department and not the entire company? So, Simon, I'm going to start with you.
Yeah, that's a good observation, and still I think it is the case. Everybody acknowledges how important it is, but then making it effective is the second challenge, right? So what we really see, and then I'm taking innovation in the broader sense, so not just digitalization, but really innovation. And it starts with leadership and culture, I would say. So without the commitment and the courageous management who dares to invest in it, daring to allow people for doing for doing and experimenting stuff, and creating this kind of innovation culture where also failure is embraced eventually, as long as you learn from it. If you can't put that culture in place, any money you're going to invest in a framework or in an attempt to do innovation will likely not work. And what we see is that within ING, at least, yes, we have a dedicated innovation department by now. We've created ING Neo, which launched slightly over a year ago. Before that, we had different structures in place, but with similar intents, indeed, really to have innovation also acting at the edge of the organization and trying to apply focus on innovation that might be slightly further away from the day-to-day operations, so that things can develop without being interrupted in day-to-day business operations, if you will. But beyond that, we really see that innovation is also everybody's responsibility. So it should be also adopted by the standing business, by the day-to-day operations, if you will. And in order to make that happen, I was already saying we apply a quite structured methodology in our labs. We do that on the basis of a methodology we call PACE, which is effectively a best of breed of a number of industry acknowledged and best practices as it comes to innovation. Thinking about agile, thinking about design thinking and the lean startup methodology, blending that and to make it fit with our own culture. We also are teaching and training our employees in our daily operations how they can apply this kind of innovation and design thinking in their day-to-day jobs, because then innovation doesn't always need to be groundbreaking, super advanced, and far away from your day-to-day business. But it can also be small steps, incremental steps, thinking about customer pains you're encountering in your day-to-day job and how you can try and solve those. So doing that, you have day-to-day improvements basically from daily operations by thinking about it and allowing our colleagues and employees indeed to make this happen. And the slightly farther out innovation, if you will, we try to tackle that indeed in a separate department, still in close collaboration and conjunction with the business to understand indeed where we need to focus on to continue to be relevant for our customers.
No, exactly. So I'm gonna move on to Jose. I mean, Simon said all the things that you're expected to hear. The leader culture starts from the top. Innovation is everyone's business. But then why does culture still sometimes remain this barrier to digital transformation and innovation? What are some of your thoughts, Jose?
I just have to say thank you to Simon because I don't have anything to say.
Just say ditto.
I would add up to that just that what is the level of maturity of the people in your company at the digital point? What are they doing in their day-to-day life, and how digital are they? That's can be some kind of thing, and that is part of the culture. Some things you cannot teach people because they are just not there yet. But as Simon said, you can tweak some things that so that it can happen. But I would say that digitalization is already here. A lot of people in companies they know this is happening, and then it's a way of what is the level of maturity that you want to achieve, because full digital companies, they are still to be born. Some of them already exist at some point, but in the banking system and the financial world, it's we can preach as much as we want, but there's a certain level of maturity in the digitalization that is not there yet. If we compare to digital services that were born like Ubers or like Revolut, which were like basic from the start, that they started like that. But when you come to now to playing to some games where you have joint ventures, and it's already a little bit different, and it's more about what level of digitalization and what level of maturity you want there, and you determine that, and you let the culture decide its way, I would say.
Yeah, really interesting. I mean, I don't know. I mean, I'm based in London, but I saw someone put on Twitter the other day that Uber suffered so that black cabs would take cards. Which is an interesting way to look at the evolution of innovation in customers' lives. And we'll get to customers' expectations in a second. But I wanted to bring Carlo in here to talk a little bit about that cultural barrier and why it still rears its ugly head at times in organizations.
I am quite lucky because when I joined the Limity was not there, so we did not have any barrier, a cultural barrier, because we were building the company, choosing people, having digital mindset by design. And this is a unique opportunity that happens once in life. But it's not only about people that we have hired time by time. We were looking to people coming from different companies. So we are almost 700 people coming from more or less 350 different companies from 20 different industry sectors. And to give you an idea, when we had to decide the composition of the team, of the user experience team, we were choosing people coming from communication agencies, web agencies, telcos. They are very advanced, at least in Italy, on this. So we decided to have a different culture, that we're not talking about banking report, but they were talking about something you can find in a cell phone. So a different approach to delivering the experience. And even if we were managing something that, if you look at the items that are in our banks, they are typical items for a bank: cash transfer, bank transfer, transactions, and so on. But if you pack them in a different way, with a different approach, with a different communication, then it can create you as an innovator. And then so it is not mandatory to innovator. It is mandatory to bring it everybody's experience to create something different. So the cultural mix is one of the key things. The second is endorsement. As I went into the board of directors asking for the investment for creating the bank in cloud, totally in cloud. We had no bank in cloud in Italy at the time, and we are talking about 3 years ago. It took just I think 45 minutes to convince them. I mean, they were convinced by design, because that was part of the original design of the bank. If we had to do this in another reality, so with all its legacies and so on, probably 45 would be the number of months to convince people to take this risk. Of course, this was a controlled risk because we're starting from empty, so it's easier because you grow time by time and you didn't have to make big bang changes that can create risk. But culture is the key enabler, together with money, because we have to be honest, to deliver digital mindset. But to give you an idea, we decided from the beginning not to have a fixed phone. So we only had cell phones. We have only laptops because we want people to be, we don't care where people are working from. We care about the quality of job people are doing. And this is all enabled by digital. So this is a kind of mindset that we have not built, but we were looking for people having this digital mindset already built in, let me say.
Yeah, no, I agree. It's we're moving into a new world where you can work anywhere. So when digital does good, it's very good. May I remind the audience that we're live, and you can put in questions on the side. We've got a question. Probably I'll send to Carlo afterwards. I think someone was interested to know a little bit more about wider healthcare collaborations that you guys are working on, but I think you'll probably take that after the panel. But if anyone has any questions, please put them in the chat, and we'll see if we can get some of them on. So I wanted to go into a quick question. We've got about 15 minutes left about customer expectations before we get into kind of our final question with the panel. So I'll go to Jose for this. In any of these sort of fintech conversations, it's very easy to get very insular and talk about building things and banks and fintechs and that inner collaboration and culture. But at the end of the day, there's a consumer on the street that is using these products that doesn't really know what an API is or even care. And their expectations are coming from a wide range of industries about how they should interact with services. So I mean, Jose, like, our banks, I know it's easy to say, are banks responding to how customers' behavior and expectations are changing? But are they really? I mean, what do you see in the industry happening in that way?
Well, certainly, when we talk about banks, old-fashioned banks, I don't know the answer there. But for the rest of the industry and how all the fintechs and the new banks they're developing, for sure they have this mindset already integrated. And Simon touched that point about the right methodologies, the lean, the design thinking, which are all things that are related to efficiency and also directly related to designing for a human. And this, in the end, that's it. Because your customer will be your customer for 1% of the time, and 99% of the time it will be human. So when you design for the people, you need to be aware of what's happening and their expectations. It's about listening to them. And I had a guy from product who said, don't listen to them also. So try to surprise your customers, because customers are very good at giving you solutions. That is this for sure. But what we want is problems. We want to solve their problems, and we need to search for that, because most part of the times, why design thinking is so well adopted in companies, it's because they're trying to solve a problem for the customer and to get them to be delighted. So their expectations are not just that we give them what they want, but we solve a problem for them. and this is our main focus. And I think, especially neobanks and in the finance world where we're moving forward, people are trying to do this more and more. And this we can see with the new apps that are coming out every time. And then, yeah, so pretty quickly I would say also look at the scene, what is happening and what are people wanting today, not just on the financial world, because this would be yeah, falling into a fallacy, which is like a the prophecy, self-fulfilling prophecy. You would be always doing the same thing for the same people. So going a little bit abroad, and I think taking a look at what other guys are doing, especially in the social media aspect also of it, and how can we connect to that. um, People, in terms of expectations, is also to say that they expect that you are not there, but they expect that you are there. So meaning that when you have a problem, a customer, he wants your customer service to be more than 200% present, and if you are not aware of that, it can be also a bad thing. So in this digital area, they want space, they want to use several apps to do things, but when it comes to getting a relationship, a financial relationship, there is this element of trust. So you need to get their expectations there. They need to know what they're doing and how you can respond, and then you can respond in an innovative way, and not just the regular way. And last point for me, it's again about delight. So delight them with what they don't have today, and respond to that. We have a saying in house that is like, uh, to get them engaged, you answer to their questions, but to get them surprised, you give them what they don't have. So this is completely the thing. So we try to do this in our approach, independent of the methodology, but we focus on these types of values. So I would say it, for me, it's more about that in terms of expectations for the client.
Yeah, very much. I think the word of this live webcast is delight, which we'll get to that in again. We have a question from the audience. It's a bit of a general question, but maybe someone wants to pop up and answer it. In your opinion, what do you think are the main blockers in the meantime for neobanks to compete with traditional banking? With neobanks, I think he means both sort of full service banks like Monzo and Starling, and maybe some other offerings like Revolut, for example. Does anyone want to pop up with maybe a comment on that question? Carlo,
Yeah, I
go
start
for
with probably the main blocker today, at least today, is the capability to sell. Because financial products in many cases are not bought from the customer but sold from the bank. So if you look to insurance, it's not banking, but it's close to banking. If you look to loans, if you look to funds, it is difficult that the customer by himself decides to buy it, because it's a difficult product. You need to have somebody who's saying, sign here, this is for you. And this is the key difference between the two. And this is connected with another thing, that is the P&L of the two. So the neobanks, and I believe they are the future, but neobanks need now probably to deliver some financial results and not only customer results, because otherwise in the long term it would be difficult to justify the investment and the, let me say, the hugeness of the customer base also, because you have an aggregation of millions of customers, but then the final result is not enough.
Lovely. So we're getting to the end of our discussion. So I'm going to ask a final question of all of you. And I love this question. I once, a few years ago, got on stage and asked where we are going. Do we actually need banks at all? So it's kind of that flavor of discussion. So I'll start with Jose first. With digital banking, looking ahead in 5 years, which we all know is, centuries in the digital world, what role do you think banks will play? So Jose, I'll start with you for a final comment.
That's a hard one for me first. But who said it's banking is necessary, banks are not? It was Bill Gates, no, 1994 at some point. What we can see is that banks, they're still around. So I think banks will be around because it's necessary that banks they exist, and they'll still play a big role in gathering all that financial trust and the solidity of where the neobanks and the fintechs they grow upon, because in fact that's what they take their strength. But banking will evolve for sure, and we will not be doing the same things that we are today, and not in the same way. We are seeing that the industry is being disrupted by other people that were not in the industry, and they're now, you can do payments on SMS. You Apple is integrating already some things inside, and when you think about Google, which is trying also to enter this space, and it's going to be very different, and you will not be doing the same things as we're doing today. And maybe the apps we're building today, in 5 years they'll be completely deconstructed, because we will be focused on one or two main aspects of what is the reality in 5 years. But for that, I would need a crystal ball to to try to answer all that.
We all had our crystal balls. Yes, I'm trying.
Yeah.
I've been waiting for mine for a while. So Simon, I'm going to go to you. What do you think in 5 years' time? What role will banks play?
Yeah, it's a great question, Liz, and indeed, I wish only I had that kind of glass ball to know where we are heading, right? So, but what we're currently seeing is a whole wave of embedded finance and banking as a service, which are really playing into the industry currently. So, trying to expand that kind of view of where that might be going is that I believe that in many occasions banking and banking services and products will be integrated in a seamless way closer to the needs of the customer. So it will go to non-financial brands who will be, as part of their customer journeys, embed financial services in one way or another. Those might come from banks if they can adjust and adapt. Those might come from fintechs if they are up for delivering that on the one side. And and then the other half of the play would be the banking as a service play, where you can imagine, at least indeed, that might allow for scale and reaching customers that currently cannot be served because they're currently not your customers. And banks could be eventually, if we really talk about the future of banks, banks could take either role depending on how they develop themselves. And it's not an either or, but it could be an and kind of play. And perhaps indeed also pointing to Carlos' role as it comes to telcos, right? The front runner role that they've had. I think they've already gone through this, like the disconnection between the infrastructural part perhaps and the consumer part on the other side. So that might be a route that banks could be facing as well, with a lot of uncertainty. But I think in the end, indeed, it's really about thinking about what do your customers need, and then who are your customers, right? So as long as you can remain super customer oriented and bringing that kind of a value to your customer, that might be your way. Be that on the front, be that on the back, be that on both. But yeah, I think the customer centricity there will be the key to succeed.
Excellent, wonderful. So Carlo, it's your
Yeah.
job to bring us home.
Yes.
Where are we
No.
going? Where are we going?
In 5 years' time, disappear. So I fully agree with Simon. I mean, embedded banking would be probably one of the main trends. So decouple, well, not decouple, but separate different roles of the bank and then embed in different environments what good things the bank can bring in that environment. That is not only embedded into processes, but maybe embedding banking into value proposition coming from different industry sectors. But specialization, so specialty banks will be always there because they address specific needs of the customers, difficult needs, so where banks are not yet commodities. Because payments, for instance, or also consumer credit is going to be a commodity, or is already a commodity. So I think that banks will be separated. So what is on a daily basis will be embedded in other processes, let me say, while specialties will make the difference and probably will make also the main revenue streams for banks.
Interesting, wonderful. I want to thank everyone. I hope our conversation has delighted the audience. That's the word of this webcast. I want to thank the sponsors of the API Chronicles, Marketa, and Jose, Simon, and Carlo. Thank you so much for a very interesting discussion. And I am very sure that this webcast will be available on demand via Marketa post our live event. So thank you very much.
Thank you.
Thank you very much.